Thanks for taking the time to join us today.
Thanks for having me.
So, before I jump into the bulk of my questions, I was just hoping you could give us a little bit of a background on yourself and then Metallic Minerals as a company for some of our viewers who may not know as much yet.
Yeah, you bet. So I am chairman and CEO of Metallic Minerals. Metallic Minerals is part of the Metallic group of companies. Metallic Minerals itself is focused on three key assets. We've got our La Plata project, which is copper, silver, and soon to add gold, platinum, and palladium to the resource down in southwestern Colorado. We have Newmont as a strategic investor. We also have the other half of the high-grade Keno Hill Silver District up in the Yukon, adjacent to Hecla, who is now ramping up into commercial production. It is Canada's largest primary silver mine and Hecla's highest grade operation. So we're excited to see that moving forward. And then lastly, the company, somewhat unusual for a junior, has got an alluvial royalty portfolio. So production royalties for gold and silver from our extensive Yukon alluvial mining claims and two different regions, the famous Klondike region and overlapping our Keno Hill district, which also has a lot of gold production historical.
Awesome. And I actually just want to touch on your last point about the alluvial royalties in the Klondike region, which is a pretty unique feature for an exploration stage company. So, how do you see this royalty income evolving, and how could it possibly become a meaningful component of shareholder value moving forward?
Yeah, you're right. It's not typical that most exploration development stage juniors don't have any cash flow or production. This kind of builds. I'm one of the original co-founders at Nova Gold in the last cycle. And what a lot of people don't know is we survived that bear market last cycle by having a sand and gravel business in Nome, Alaska that brought in $1.5 million of revenue every year. And that allowed us to go after the giant Donlin gold deposit during that bear market low back in 2001, and to be able to fund our exploration on that project until it really, the market started to turn around. And so we had the opportunity here in Metallic Minerals to do something similar. We were approached with a large block of land in the Dawson area, the Klondike goldfields. And that was a historically unmined block of the Klondike. It's kind of the growth direction for the Klondike to move to. And so we picked that up and we've basically got the permits and have invited, highly experienced operators to come on board. So we're just starting to build that business out. This will be our third year of production. We anticipate it will be our largest and certainly the longest season of production that we've had. And what we see is initially covering costs for running the company, and then over time to build that out so it becomes something that actually contributes towards our exploration costs. And we have enough room for 10 or 15 operators on our claim. So potentially at some point this can become a fairly substantial royalty and cash flow generator. And we'll look at the best way to manage it with that, but it gives us that kind of staying power and non-dilutive cash flow and funding that is hard to come by in the junior mining space.
Yeah, that's awesome to hear. And recently, also in the news, it was that Metallic Minerals completed an $8 million financing with some strong institutional and strategic support, including Newmont, which you just mentioned. So, from an investor standpoint, how will this capital be allocated to maximize near-term value creation across both your Yukon and Colorado assets?
Yeah, so our emphasis on this financing, we were really pleased to put this together. So Newmont was the largest participant. Management, the entire board participated, our existing shareholders, and we also attracted a number of new investors to our register. So we were really quite pleased with how that came together. Those funds are going to go towards a combination of work on that flagship La Plata project down in the US. So that's going to be both a resource expansion focus as well as testing some of the new targets that we've developed in collaboration with Newmont. With Newmont, we have a technical committee. They're an investor in the company, but they are operating like a partner. And they're providing us access to some of their key geological team, geophysical team, and other support, which is really aiding us tremendously. So with that work, we've identified 10 prospective areas of additional porphyries outside of the current resource at La Plata, and so wanting to get some drill holes into those targets as well. In addition, we tabled our first resource at Keno Silver in 2024, adjacent to Hecla, as I mentioned earlier, and there remains tremendous upside to expand that area. We're focused on shallow open pit, so highly scalable resources in the district, and we'll be taking some of those proceeds from the financing to put to work in terms of growing resources at Keno Hill as well.
Awesome. And for Keno, kind of speaking on that a little bit more. So I heard that you guys have identified over 40 additional untested targets. So I was curious to know what the path to materially expanding that resource base is and how might that translate into a valuation re-rate for your investors.
Yeah, you bet. So the initial resource that we tabled in 2024, 18 million ounces in 4 separate deposits. And 3 of those are open pitable. One of those is a combination of open pit and underground. And so all 4 of those remain open to expansion. So clearly continuing to drill a long trend and at depth on those deposits has the potential to grow those. But as you mentioned, we've got 40 other targets that have been identified through a combination of surface sampling, geophysics, and other tools to bring those together. Some of those have already been advanced. 11 targets have got initial drilling, trenching, or other work that's confirming we've got a significant target. And so those will be a priority for drilling. And each one of those has the potential to be a new discovery zone and potentially to become a resource. When we look at that Keno district, you've got 300 million ounces, over 300 million ounces of past production and current resources and reserves, including Hecla's work. And that's down to a depth of about 600 meters. What we can see in the Keno district is there's great depth extension, and that's where Hecla's focusing. But we also, on the eastern half of the district that Metallic Minerals control, we've got that same geologic setting. We're finding that mineralization right at surface. And so we've got the ability to significantly grow resources in the other half of the district. So this is a district that it's not hard to see going from 300 million to 500 million ounces. And over time, this may be one of those world-class districts that could even, be 1 billion ounces or more, putting it not only as one of the highest grade districts in the world, but potentially as one of the top producers.
Absolutely. Now, I wanted to circle back to the La Plata project, which you mentioned. So it continues to show a lot of strong copper, silver, and gold potential, but it also includes a lot of critical metals like rare earths and gallium. So how are you positioning Metallic Minerals Company to attract strategic partners or investors that are interested in the U.S. critical minerals supply chain?
Yeah, it's a really interesting system at La Plata in that way. So our resource today is copper and silver, but it's in a type of geology. First of all, it's a porphyry system, but it's on the end continuum of porphyries, which are precious metal rich. The technical term we use for these is alkalic porphyries. And what's interesting is alkalic porphyries are often also the host of rare earth minerals by themselves. So here in the system where we have copper and silver, and the new resource is going to include platinum, palladium, and gold as well, those same rocks are hosting rare earth elements and other technology metals like gallium and tellurium and vanadium and a couple of others. And so we are currently right now undertaking a collaboration with researchers at Columbia University to take a look at recovery of those rare earths and other technology critical minerals from our copper silver ores. And so the opportunity here is most of the value as we see it today still going to remain with that copper. But if you've already done the processing to recover copper, it's a great opportunity to be able to then do another step process where you can recover those other valuable minerals. And so already we've got, as I said, this collaboration with Columbia University. We've got other groups that are interested in processing for those that could be, let's say, technology partners to join our effort. And clearly the US government is quite keenly interested on domestic sources of critical minerals. And so this is an opportunity to basically invite collaboration with the US government as well. And that's been quite an interesting theme in the market here, over the last 6 months. As the US government looks for ways to be able to particularly focus on areas for elements that are almost 100% dependent on import, such as rare earth, gallium, tellurium, vanadium, and some of these other metals.
You were referring to the recent deal by Trilogy and the U.S. government, where I think the share price jumped about 300% last month, with a 10% stake, right, for the project in Alaska. And there's numerous other examples from Department of Defense and Department of Energy investing directly into Canadian juniors, right? So you and I have, go way back, Greg. So, 10 years ago, if you were telling people and younger investors like Hemley, if that was happening, it'd be very difficult to believe, but that's actually a reality now. And you and I both know antimony, critical metals, PGE, like the other sister company, like PG, Stillwater, Sylvania. These critical assets, critical metals, you're not really able to source them anymore from China, even though it's half price or even a quarter of the price. And resource scarcity is a real thing now.
It is. And I think what's being recognized more and more by the marketplace is the fact that these resources are, especially with a US address, like our Colorado project, or as you said, our sister company, Stillwater in Montana, there are not very many significant US-based, whether it's copper, rare earth, or, platinum, palladium type assets, to even be looked at. And so, we're coming out of a 15 plus year bear market for the sector. Assets like this are quite scarce and valuable. And I think the market's starting to revalue those assets, looking towards the fact that they're going to be so important for the US domestic supply and economy and supply chain resilience.
And kind of speaking a little bit about some other stuff that's been in the news, I think I read the other day that both gold and silver are up 50 and 71% year to date. So with some of these precious and base metals showing some renewed strength this year, how is Metallic Minerals positioning itself to both capture investor attention and what's becoming an increasingly selective capital market for a lot of junior miners?
Yeah, absolutely. I think there's a lot of attention now. So one of the things that is worth noting is that the mining industry has kind of evolved over the last couple of decades to become really similar in many ways to the pharmaceutical biotech world, where we've got the exploration is happening in the venture stage companies like Metallic Minerals and others, and the mining companies are the producer of a product. They're very good at building mines and operating mines. So that kind of model is very similar that we see it in pharmaceutical biotech world. And we also go through three phases of study. We go through a preliminary economic assessment, when we go through a pre-feasibility, and then a third phase of feasibility, which is when you have studied the project enough and engineered how you're going to mine it and what the costs are going to be that a bank will finance it. And so, a lot of similarities that way. What we see with that change. So if we look back a couple of decades ago, you would have seen large mining companies with very large exploration teams. When I started my career out with Barrick Gold, there were 350 explorationists working around the world. Today, that's a much smaller team that primarily monitors, the juniors. Major mining companies do exploration around their existing mines to replace reserves, but the industry is almost completely 100% reliant on the juniors to find the deposits, grow them, de-risk them through feasibility to bring them to market. And oftentimes what we see is that the majors want to step in after those assets have been de-risked and taken to a pre-feasibility or feasibility level stage. And so, this is a situation where the setup here now is that the market is starting to signal we've got a supply and demand imbalance. That's why we're seeing these higher metal prices. That's signaling to the market we need new supply. But because we've starved the junior market of capital for the last 15 years, effectively we have many fewer discoveries in the works compared to past decades. And so even though the market is signaling we want more supply, it's going to take years for those deposits to be discovered and then to be advanced. And so that really adds additional value to, if you've already got a significant resource, whether it's in copper or silver, and you're able to advance it now that those metals are starting to move, it's really going to put you at a strategic advance, a strategic opportunity for your company and for your shareholders to create value in this much more restricted marketplace.
Definitely. And now for one of my last questions, I was just kind of hoping you could tell me a little bit about maybe what Metallic Minerals has on the horizon in the next year or so.
Yeah, I think besides the metals prices, as you mentioned, which are doing so well and drawing new attention to the junior space, metallic minerals specifically, with the two key assets, the one in Colorado that we're collaborating with Newmont, so that's our copper, silver, PGE, and critical minerals asset. We're going to be, as I mentioned earlier, expanding the resource on the known resource, getting the first drill holes into the highest priority drill targets that we've identified that are additional porphyries on the same property, as well as in parallel up in the Yukon adjacent to Hecla, growing the resources and potentially making new discoveries there. So I see the remaining year in 2025 as an exciting one for us. And 2026, I think, can be one of the best years in the company's history, with all the activity on those two major projects, along with a growing royalty portfolio that's producing gold and silver, for the company.
Obviously, the share price has continued to move up. I think just to add to Hemily's questions, what other things are Metallic and the group doing to outreach to new investors in North America and Europe? I know you just got back from a roadshow. Is there a strong push to that the last 2 months of the year?
Yeah, actually, fall is a busy time for companies. So we just were at the probably one of the best events of the year, Beaver Creek in September. That was in Colorado. Great show. We had the strongest meeting schedule that we've had in the number of years that we've been there. We're going to be headed to Europe in early November for the Precious Metals Summit in Zurich. We're also looking at events in London. And then, of course, as we start to roll into the new year, you've got both the Roundup event in January in Vancouver. We've got PDAC, and there's a number of other events that we're currently looking at, especially with this increased interest in high quality development stage assets in the mining space. It's a great time for us to be getting out and telling a story in metallic minerals that is not as well known as it really should be, considering the caliber of the resources that we have and the partners like Newmont and operators next door like Hecla.
Great. Yeah, no, we're very happy. I think we featured Metallic early on when it was low 20s. It moved up as high as low 40s. It's settled back down in this 35 range, but it sounds like there's going to be a lot of news flow and a lot more generalist and fund money coming into the space. There's gold inflows the last 2 months, positive inflows for the first time in a number of years on the ETF, and obviously gold hitting 4,000, silver over 50 briefly. These are all historical highs. It bodes very well for MMG. Let's look forward to another conversation before I guess you head off to Europe and to Zurich at the Pressure Summit. I'll see you guys there, obviously. But yeah, great wrap up, Greg. Let's do this in a few more weeks, and I think we're gonna see a great returns on MMG in the coming month.
Yeah, great. Yeah, I think it's going to be an exciting fall season here for us.
All right. Well, thanks so much for your time, Greg. And like Jerry said, yeah, we're definitely excited to keep keeping our eyes on metallic minerals in the coming months and the next years. So thank you.
Thanks for having us.